Okay, I'm back with one of the videos on Tesla. A few of my friends have asked about what I think about Tesla and what my opinion is, and where is it going to go. We recently had earnings for Tesla stock. I think the earnings was on 16th, 18th of October. Yeah. So we had the earnings for Tesla on October 18th, and maybe that was a bad news in the earnings call, and probably that is driving the stock down. But I'm still bullish. Tesla as an organization, it is one of the largest electric vehicles manufacturing company, and in addition to that, it is also getting into cyber trucks and a lot of other initiatives, right? With respect to what I think where the stock will be next year or two, I definitely think there is scope for the stock to run up to 400s or 500s in the next 2 to 3 years. I won't be surprised if it doubles itself in a 3 to 5 year time frame. I am strongly bullish on Tesla, and I think this is one of the opportunities for all of us to grab the stock at a cheap price, right? So that we can benefit from the price and the market value appreciation in the upcoming years. Looking at the chart, I'm on Thinkorswim platform. I'm putting in TSLA, and if you see, it had its lows around 101 in the January this year. It rose to 300 during the last earnings in July, and then it has started coming down again, right? So this is a weekly chart. Let me go to the daily chart. So I am running this for a year, and if you see right now where the stock sits at 212 or 13, it had the previous support 18th of August. The stock was at the same level or same price, but it bounced back. If you go back and check during Feb 2020, 21st of Feb this year, right? It has its highs around 216. If you see this line, right? What I'm trying to do is research and analyze the charts, identify what the stock might do in the upcoming weeks, and maybe take a trade, right? So as I mentioned, long term, I am bullish. It is a strong company. The economies of scale that it generates in producing the vehicles, it is a tough competitor for everyone. I mean, all the other electric vehicle companies, whatever you consider, they cannot compete with Tesla because the scale at, at which it runs, uh, given how gigantic the company is, and given it has its Mr. Musk driving the, I mean, initiatives one or the other every other time, right? So I am definitely bullish on this stock. So let's see. So I think what might happen now is because it got its previous support here at 212 in August this year, it has its highs at around the same price level if you see where my mouse is during Feb, right? So what I'm thinking is it got some support around the level, right? All the bad news which came out of earnings, and I think all the investors are done selling their stock. Now investors might start jumping into buying it at the cheaper price, and if it rebounds, and again I would mention if the stock rebounds in the upcoming weeks from this level, if it doesn't keep selling off, we can grab the stock for a rebounds, right, to the higher price. Now, what trades that we can do here? I do not advise you directly just buy the stock because no one knows in the world what is going to happen tomorrow. Long term, definitely we are bullish, but we should take some trade with defined risk. You should not take a trade with undefined risk and just buy the stock and leave it in your portfolio, right? We never know what is going to happen. So let's look at the chart. Uh, let's look at the option chain. Again, I'm on Thinkorswim platform, put TSLA, enter, it gives you the option chain. And let's give the stock appropriate time to bounce back and to generate some profits for us. I'm going to June 2024, which is 8 months out from now. This 244 days out, which is 21st of June 2024 is the option expiry. And I am thinking of buying one of the puts So what my strategy is, I want to do definitely buy the stock with puts and calls, right? I want to hedge the long stock with a long put, and I want to also sell a out of the money call to reduce my cost of buying the put, right? So I'm trying to reduce the cost of hedging, right? So whenever you want to save your portfolio, whenever you want to hedge your portfolio or minimize losses, we have to buy puts and calls in one or the other direction. Now, let me go and give you some idea of what I'm going to do. So here, I will probably buy 100 stocks. So let me give me a minute. Okay. So this strategy is also called as collar, right? Buying 100 stock, buying one put at the money and selling out of the money call is called a collar trade, if you see. And here you see what I'm trying to do. I will reduce this to one, so we don't want to do 1,000. So I'm buying 100 shares of Tesla stock at 211 or 212. Next week, whenever it opens, I am buying a 210 put, right? Uh, yes, long for June 2024, and I am selling a call which is like 300 call, which is out of the money. Okay, for June 2024. What is the logic behind taking this trade? I want to be long Tesla because I am strongly bullish and I think it's going to go up, right, in the next 6 to 8 months. I am buying a 210 put because I mentioned I don't want to take any trade with unlimited risk. I want to define the risk. So I have taken a 210 put at 29.7, which approximately is 3,000 bucks, 3,000 US dollars for a put contract. How it will benefit me is if the stock keeps going down or if something happens, I have the right to sell the 100 shares at 210 with limited loss, very small loss, right? And then I'm going to sell a 300 call for June 2024. Uh, in case if the stock keeps moving down, I have this put to hedge the price of the stock or the cost of the stock. In the meanwhile, I am also selling a 300 call, which means that in case if the stock is above 300 on 21st of June 2024, I will be benefiting. If you see the net cost of the trade right now is 230, and if the stock reaches 300, we can quickly capture the gain, right? So you need to uh, identify such strategies with defined risk, right? Where you can also benefit from the price appreciation of the stock, like we are talking about Tesla, and you are also hedging your stock by buying the puts and selling the calls, right? So if you right click here and go to analyze trade, uh, in the risk profile, you see this is the chart which which tells us what the profit and loss will be right here. So because the net money we spent on buying the put after we deduct the call, what the price of the call, what we sold, right? It is 2,000 is the maximum loss in this trade in case if this Tesla stock is below 230, right? The break even is 230, and if it keeps rising, we keep making money on the trade, right? But again, think about it. If you are bullish, we can take this trade. It is just putting 2,000 bucks on risk, but I do not think that the stock is going to go below all 6 to 8 months from now, right? It is going to rise, and that will generate some benefit to us, right? So this is one of the trade I talked about. Thank you so much for watching the video, and please subscribe for my to my channel, and I will come back with more videos. Thanks.